Bitcoin just exploded past $80,000. And the strange part is, this rally may have very little to do with Bitcoin itself. In just days, Bitcoin jumped from the mid-$60,000 range to above $80,000. That is a massive move. But underneath the Bitcoin chart, something much bigger is happening. The United States dollar has been weakening. Investors are watching government debt, interest rates, and the future value of money. The United States Treasury is buying back longer-term government bonds. Gold is rising, and money is flowing back into Bitcoin. So what is actually causing this? And is this the beginning of another Bitcoin boom, or another rally that disappears just as quickly? Let's start with the move itself. Bitcoin pushed above $80,000 on August 25th, reaching its highest level in months. Reuters reported that Bitcoin had gained roughly 30% in 10 days. That is not normal movement for an asset this large, and the timing matters. The rally came as investors reacted to a weaker dollar and renewed concerns about currency debasement. At the same time, Treasury activity was affecting the bond market. And when the bond market moves, currencies, interest rates, stocks, gold, and Bitcoin can all react. That's what makes this story bigger than crypto. Look at gold. Gold has also been climbing. Bitcoin and gold are completely different assets, but investors are buying both for a similar reason. They want something outside traditional money. Bitcoin offers something gold cannot: a mathematically limited supply. There will never be more than 21 million Bitcoin. That scarcity does not guarantee a higher price. But when investors start worrying about the purchasing power of currencies, scarce assets become more attractive, and Bitcoin is one of the most visible scarce assets in the world. But scarcity alone did not send Bitcoin above $80,000. There was another force: institutional money. Bitcoin exchange-traded funds have been seeing renewed demand. That means traditional investors can gain Bitcoin exposure through familiar financial products. And when large amounts of money move into an asset with limited supply, prices can move very quickly. Then the rally gets another boost: short sellers. For weeks, traders had been betting that Bitcoin would fall. But when Bitcoin started climbing, those traders had to buy Bitcoin to close their losing positions. That forced buying pushed the price even higher. More traders got squeezed. More buying followed. And suddenly, the rally started feeding itself. Billions of dollars in bearish crypto positions were liquidated during the move. So this was not simply everyone suddenly deciding Bitcoin was worth more. Part of the move came from investors being forced to buy. But now comes the important question: can the rally continue after that forced buying disappears? Because this is where Bitcoin becomes dangerous. The same market that can move 20 or 30% upward can move just as violently in the opposite direction. If ETF inflows slow, if the dollar stabilizes, if investors stop worrying about monetary conditions, the momentum can disappear, and Bitcoin can fall very quickly. So $80,000 does not prove that a new bull market has started. It proves that demand is strong right now. The bigger question is why? Because this rally is happening alongside a much broader financial conversation. Investors are asking what government debt means, what weaker currencies mean, what happens when monetary policy changes, and where they should keep their wealth if traditional money becomes less predictable. Bitcoin is one answer some investors are choosing. Gold is another. That is why this rally matters. Not because Bitcoin is guaranteed to reach $100,000. It isn't. Not because the dollar is collapsing. It isn't. But because investors are once again putting serious money behind the idea that scarce assets can protect wealth when confidence in traditional money weakens. And that brings us to the real story. Maybe Bitcoin's biggest competition is not another cryptocurrency. Maybe it is the traditional financial system itself. One system is built around currencies managed by governments and central banks. The other is built around a digital asset with a fixed maximum supply. And investors are deciding, with real money, which one they trust more. That does not mean Bitcoin will win. It means the question is becoming harder to ignore. So watch what happens next. If institutional money keeps coming in, if the dollar stays weak, and if investors continue moving towards scarce assets, $80,000 could eventually look like only the beginning. But if those forces disappear, Bitcoin could give back the entire move. Either way, something important has changed. Bitcoin is no longer just a crypto story. It is becoming a story about money. And the biggest question is no longer, how high can Bitcoin go? It is, why are investors willing to put their money here in the first place? Because the answer to that question could tell us much more about the future of Bitcoin than the price on the screen ever will.